Hey everyone, Mark here. Hey, thanks for joining me, Mark P. Markets. Thanks for joining me for another Greenbridge market analysis. So in this session, I'm going to do my new format. I'm going to cover just Bitcoin. And if you'd like to see other charts, like I see some requests here for the dollar and all that other stuff that I used to cover regularly, just put them in the chat and I have no problem. So if you want to see NASDAQ or S&P or bonds or whatever, just put it in the chat. Also, if you'd like to see an altcoin or anything like that, please make sure to put USD or USDT after the coin so that I get the symbol correct once I get through the chat. All right, so with that said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. And here, let me get my charts up here. Just one moment. Okay, there we go. And also, if you'd like to share what city or what country you're from in the chat, that's always a fun fact. I am streaming from the greater New York City area, northern New Jersey, and that is where my accent is from. Okay, so let's get started. First things first, Bitcoin. Now, earlier in the week, if you watched my previous stream, we talked about the economic calendar and we looked at the events, right? For those of you that recall. And there was nothing special on that calendar, right? But then there was this report called the CPI report. Now, just I want to point out, for years and years and years, no one cared about CPI reports. It's an inflation report. And the market never moved. So the report comes out yesterday and everyone cares now. So that's how sentiment changes, okay? You can't predict that. It's just now it's a big deal. And now the Fed is going to be hawkish and blah, 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 even though a lot of these signs have been obvious. So again, this is about market sentiment. It doesn't matter what we think. It doesn't even matter what the reality is. All that matters is the perception of the herd. And if the collective perception is one way, then that's the way it's going to be. You can't fight it. So that's like saying things are too high, Bitcoin is too high, the stock market's too high, that kind of thing. I mean, yes, it's overbought, but trying to take action on something like that, going against that sentiment, can be very expensive if you don't wait for the evidence or the proof to show up. Okay, so that's what I want to mention first. Now let's get into this Bitcoin chart here. As you can see on this chart, for the longest time I had this resistance line up here, okay? Probably for the entire year it's been up there. As you can see, we're getting the reaction off of it. Now, we had the pin bar the other day, okay? After the push up to that level, we got the bearish pin bar, but that pin bar, if you recall, also at one point the candle was green as it went to 69K. This part of the candle was green. So it looked like it was going to go higher forever. And then we got the outside bar. Now, I don't know if that was a reaction to the CPI news or if there was some other catalyst behind that, but none of that really matters to me. What matters to me is we got a reaction off of a level where a reaction was likely. I sent out an analysis yesterday that basically said that this area is highly vulnerable for such a fake out. And buying in this area, especially if you're buying blindly, is a bad idea. So now the market's starting to show some proof. So now let's get into what this can turn into, because there are going to be a lot of people that say, okay, here's my chance to buy into this thing, right? And I talked about the support level in this area here. It's an old resistance, so it's likely to act as a support. And as you can see, we had a candle wick, a candle tail, develop in that area. All right, again, that's going to be very hard for a swing trade. You're not going to be able to swing trade that. That's more of a day trade type of setup because it's a single candle on this daily chart here. So we need a series of candles for one. Now today's candle is an inside bar. Typically, we look for something like this to develop into a buy signal off of a support, but you have to look at further context. You can't just judge it like that. Because here's the thing, this is an all-time high, number one. Number two, this is an outside bar, all right? And that's usually a sign of a change in momentum. Because we're coming off of such a significant high, and it's basically a failed high, right? Or it just went slightly higher than this high over here. It's a failed high, basically a double top. So buying into this, if this turns into a buy signal, which means this candle would have to close just like it looks right now, and the next candle will have to take out this candle high, that would be a buy signal, and the stop would have to go somewhere below this low. What was this low here? The low was 62,856. So I guess around 52. I'm sorry, 62 even. And the high here was 65. So you're looking at about a 3,500 or 4,000 point stop, which has been about the average. But the thing is, the chances of getting stopped out after such a trade in this area is very high. So it's the location. Now let me put it to you this way. Take a look at a weekly chart. Does this look like a high or a low to you on the weekly chart? This is a crazy place to be buying and thinking that this is going to continue. I mean, this move is vertical, basically, right? Now, if you notice this week's candle, it actually, when this thing was at 62 whatever, the candle looked more like a pin bar. But, you know, as we can see, the price has recovered somewhat. If this candle closes this week out and we take out the low of this candle, if we basically close like this pin bar suggests, or you know, if the open to the close narrows and we get more of like a smaller range in that area there, and we get a bearish pin bar, watch out for the break of that weekly low, because that will be a sell signal. All right, and we haven't seen one of those in at least a month. We had that bearish pin bar back here, which never followed through, right? And we got this one more leg higher. But this is a failed high on the weekly as well, if this closes like this, relative to the old 64K high. So you have to pay attention to these levels, right? None of these fake gurus on YouTube are interested in any of this stuff because they want to push hope so that you click on their affiliate links and whatever's going on there. I watched a very interesting video. I thought I was the only one that was complaining about this stuff, but apparently not. And someone made this video about all this hype that's going on with these altcoin videos. So I'm not the only one that notices this, right? I'm bringing this up now because when you see that kind of extreme hype and optimism at such highs, that is not good for the future, because chances are we're at a cyclical top. All right, when you see that type of enthusiasm, I mean, they're basically, everyone's saying you're going to be a millionaire and a billionaire at the top of the market or at a top. Where are these people at the lows? Right? How come they're not saying that at the lows? They always come out at the highs. So just important, use that information as a contrarian sign. I saw some comments about what's going on, like in the London subway, I guess the subway stations, the ads. Right? They're pushing this stuff heavy. There's billboards. Like, this is going on all over the world. It's not just, I thought it was just here in my town. No, it's all over the world. So just something to keep in mind. When you see all of that, those are contrarian signs. Now, another thing to add to that is the sentiment will usually, the sentiment will peak before the market peaks. Right? So when you have all this super extreme sentiment, it's like crazy, 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 right? Then once that peaks, then that's when we're likely to see the peak in the market or whatever, and we need to wait for that proof. So we can't sit there and try to trade on that. We just have to let it unfold and wait for proof. As far as proof goes with Bitcoin, we'd have to see lows get taken out, and we haven't seen that yet, but this is still a highly vulnerable area. Just something to keep in mind. What I would like to see for a more conservative buy signal would be something maybe testing that 60K or something slightly lower in that midpoint of the range, or we test 57K, okay? That would be also very interesting. A lot of people are going to rush into something like that thinking, okay, I just bought the best pullback ever, blah, 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 but you really need to wait for confirmation there, and if we get it, that could be a higher low double bottom type of situation. It could be for swing trades that maybe can go back and test maybe the midpoint or the high point of the range. That's all I'd be looking for in that situation, because if this thing turns into a right shoulder, then we could get a head and shoulders. Now, I'm not going to sit here and say just because a head and shoulders shows up that this is going to be a big bearish reversal and blah, 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 because these patterns are random. But if it shows up, if the lower high shows up, you have to be very cautious about that, because that's also going to be a red flag for most of these garbage altcoins that are being pushed purely by advertising and marketing and really nothing else. Okay, so anyway, that's the Bitcoin situation. Too early to do anything here, and if a buy signal develops, be prepared to adjust or get stopped out quickly. I mean, just be prepared for that. I don't like this location, and again, you can just see why if you look at the weekly chart. Not the best location. This game is about looking for high probability scenarios that offer a good reward risk. This location is not a high probability location. All right, it's not a major support level. It's a minor support level coming off of a potential double top. I mean, a failed high is the same as a double top, basically. Just went slightly higher. All right, it's the same idea. So anyway, just want to point those things out. That's my Bitcoin outlook right now. We'll see where it goes, but I wouldn't do anything here. All right, let me get into the chat because now I want to start answering your questions. Hey, Travel, good to see you. Okay, cool. Hey, X, so DOT. Let's start with DOT. DOT, USDT. So yeah, there's a lot of, again, this is like one of, look at this, right? So this thing got hammered just the other day. Hey, this thing was doing great, right? I mean, look at the broader structure is bullish. But again, these things are being hyped. A lot of these things, right? I don't care how great their project is and blah, blah, blah. They're all going to do the same thing once the money starts coming out of these things. And, you know, I also learned, because the other day, Kai, I don't know if he's in here, Kai was talking about that his YouTuber friend or someone gets offered money all the time to push these things. Well, I watched another video that basically confirmed that basically a lot of these YouTubers with large followings are being paid by the marketers of these coins. So the only people that are getting rich in these situations are the developers. That's who's making 10,000% on their money, not the retail traders and investors. They need you, though, to get themselves out of the positions, right? They need you to put your money in so that they can sell it to you. Just keep that in mind. So back to DOT here. So it's pulled back like the rest of them, right? And now you have this bullish pin bar developing off of a higher low. So I'm sorry, that's not a bullish pin bar. We have an inside bar developing off the higher low, kind of like what I suspect Bitcoin will look like that, you know, with a wider range inside bar. The current bar in Bitcoin's a lot smaller, so it's the same situation. If this candle closes, you do have a higher low. So theoretically, this thing theoretically should test the high or possibly make a higher high. I mean, the trend is bullish. But the thing is, there's no guarantee that it will. So you have to be willing to take the risk. What is the risk in that situation? Well, your stop would have to go here, not below the low of that pin bar, because, I'm sorry, I keep calling it a pin bar. Not below the low of the inside bar because that's too tight. So the stop would have to be at 42.50. If you're buying this thing at 48.5, so you're looking at a good 5 or 6 points of risk. And this thing would have to test this high, if not make that higher high, and that's what, $55 around there. So if you buy the high of this candle, 49, I mean, you're just barely getting 1-to-1. And that's assuming that this thing can get up to here, okay? You're barely getting 1-to-1. So again, this is going to be one big Bitcoin trade, because I'm assuming that if Bitcoin can make another test of the high, you'll see that. But keep in mind, I've noticed a lot of these coins are being hyped so much that a lot of them are starting to do their own thing. And I guess that makes sense. I mean, it's just my opinion. I have no way to prove that. But it seems like Bitcoin does one thing, and many of these altcoins that used to just follow are starting to, you know, show us different charts. Okay, so I find that to be strange. But I don't question it. It is what it is. So my point is here, this game is about risk. You need this thing to push into this high. Maybe get some hype news that gets the thing up there. I don't know. Otherwise, you're risking $5, okay, on a swing trade for something like this. You know, as far as investing, people keep asking about investing and stuff like that. You missed the boat as far as investing goes. I mean, look at these things. Now, let's take a look Let's take a look at a weekly. All right, let's go to a 1 week. Hold on, look at this. Look at this. You want to invest here now? Like, this is a really bad place, right? They all look like this. This is a failed high on a weekly time frame. So I wouldn't be surprised if in 3 months these things are a lot lower than they are now, because the optimism is so extreme. Everyone is so sure that these are the ways to get rich over the next blah, 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 right? Not at these levels. So they were saying the same thing 20 years ago during the dot-coms, okay? Everything, all these stocks, and those were stocks. You couldn't, back then, you couldn't pay like an analyst. They came out with all these rules. Actually, it was after all that. But you couldn't bribe an analyst to come out and give you a good report. Actually, in 2000, you could. It was actually after 2008, I believe, you couldn't do that anymore. It was somewhere in between. They changed those laws. In the Bitcoin world, there are no laws. Just keep that in mind. Anyway, so that's what you're looking at with something like that. If these things start breaking their supports for DOT, it would be 39.81, right? This thing starts breaking like this, then it's time to hold off on these, right? Because if this structure is going to maintain itself, it should not break that support. So just something to keep in mind when these things start to turn, because this cycle at some point will turn, and we will. Everyone will say, "Oh no, we're in the altcoin winter," or whatever terminology. They came up with their own stupid language with these things, which I just find to be ridiculous. But anyway, so watch out for that bearish cycle. We're not in it yet, but when it starts, that's when everyone's going to start losing their money. Okay, all the money that they've made, they're going to start giving it back because they're not going to recognize that we're in a bearish cycle. All right, so that's DOT. Okay, Elijah, hey, Laba, I can't even pronounce that, but okay, cool. Hey, thanks for stopping by. Okay, Peter from Slovakia. Okay, cool. Can you check out gold? Yes. So gold, first, before I get to gold, let's take a look at the dollar. Right, look at this dollar. The dollar is turning into an altcoin. I guess there's a chat room somewhere where they're hyping the U.S. dollar. Maybe it's at the Federal Reserve. Maybe the Federal Reserve has like a chat group, and Powell's sitting there hyping the dollar or something. I don't know, but look at that breakout. That's an altcoin breakout, if I've ever seen one. That's the U.S. dollar. So that was a result of that inflation report, okay, that we had yesterday, which I guess they're pricing in. The market is pricing in that the Fed is going to have to take action, okay? Again, the market is a discounting mechanism, so you don't see much of an effect anywhere else. But obviously the smart money has known this for some time, because this trend has not been bearish. I've been pointing this out for months, that the dollar is not trending lower, it's going higher. And this is a breakout. That's a pretty serious breakout. Okay, the euro and the pound and all these other ones, they got hammered on this. Okay, gold is doing something different. We're going to take a look at that here in a moment. But this is a significant piece of information right here, because this is going to eat into the stock market and everything else. We don't really see it yet. You know when you'll see this? In about 3 or 4 months, when the companies start coming out with their reports and they're like, oh, we made less money than we expected, and or they lower their guidance or some stupid stuff like that, and then you see these stocks start giving it back, right? That's the dollar eating into it, because they're going to have to do something to control inflation. So the dollar is pricing that in now. All right, so just something to keep in mind. That's what's going on here. That's why I have very little faith in the stock market at these levels. I just have very little faith, especially in light of this, because you need easy money like we've had for a year and a half, easy money flowing into this market to that's what fuels the stock market and everything else. It's all the inflation, right? All the money floating around. Well, when the Fed starts taking that money out, then the game of musical chairs, the music stops. And this is the beginning of it right here. Okay, we keep breaking out, we keep going higher. It's going to start to eat into things. All right, so let's get into gold here. Now, I'm not an economist, but you know, this situation is what the Fed has done. I think I don't understand their thinking or the way they do things. If it's completely politically motivated, it's not supposed to be, but whatever. You know, I don't sit there and try to figure out the Fed, but I just think what they've done is irresponsible, okay? Because when you get this type of overinflated situation and they just realize that, oh, we have inflation? Oh, we better do something about this. The after effect of that is usually not pleasant. So let's talk about the gold, okay? Gold broke out with the dollar. That's not normal. So I don't question that either. I don't sit there and say, well, why? Well, why? because they can't both do this at the same time for long. So gold, of course, has other variables that drive it. It's not just the dollar, but the fact that if you take a look at, a currency like the pound, for example, look at the pound. Pound got hammered. That's what gold should be doing, okay? Take a look at oil, okay? Look at oil. Oil pulled back too, right off of its high. I mean, this is still a good-looking chart, but still, I mean, look at that effect. That's the dollar basically having an effect right there. So gold is not doing that, right? So that leads me to believe that what's going on here in gold, because remember, gold is a highly manipulated market. It's being driven higher for whatever reason. And where's this thing right now? 1862. So you can't do anything with this now. It's in a highly vulnerable area. Sure, it's vertical, but look what you're going into, right? You have this old support up in here. What is that, 1890 something? What is that? 1890. I remember this level because I took a long off of this and got stopped out like in an instant. So look where it's going here. You're going right into that. So you can't buy this now. This is a place to sell gold. In fact, someone in our chat room put something about, I think he was getting out of gold stocks or whatever, taking profits. That's a good idea in this type of situation. Let's take a look at some gold stocks real quick, like wheat and precious metals. Look, they're going to be doing a similar thing. I mean, look at that. How about Newmont Mining? I mean, look, they're all doing the vertical thing. Look at this. Okay, so yeah, I think it's a good idea to take money off the table if you've been in gold, you got in gold at lower prices, because I don't think this is sustainable at all in light of where the dollar is going. Okay, the dollar broke out. It wasn't like the dollar broke out and faked out. So will gold test this high? I don't know. If they can come up with some catalyst to maybe get it there. But I think chances are this thing's more likely to fake out, if anything. So until the dollar changes its tune, I'm not interested in gold because I don't trust it. Even though when it comes to technical analysis, it really should just be about the chart. You really shouldn't be too distracted by some of these other factors because, as you can see, markets are irrational. And as we know with logic, when dollar goes higher, gold should go lower, and gold is saying, oh, I'm doing whatever I want right now. So people that get stuck in logic will short something like this, right? And you can get really, this can be a very expensive mistake. So with that being said, even if I was going to do something with gold, okay, it would have to pull back to this old resistance here, right? That old resistance, that range high, which is what? 1825 area. If anything, I would have to do something there. But like I said, if the dollar continues to do what it's doing and the dollar's not pulling back, I'm not buying gold because it's going to catch up to gold. All right, and when it catches up, you could see, you get this kind of stuff back here. I'm not getting caught in that. So it's either 18 quarter basically, or what is this, 1790 area? No, 1760 area, right? Those are your supports on gold. That's the only thing you can do with something like this, right? Can't buy it now. If you have some, take some profits. I think it's a great time to lock something in because you're facing a very high vulnerability that is not apparent. It's not obvious on this chart. There's no oscillator that says, look, this thing is too high, right? There's nothing that says anything like that. It's never going to be obvious like that. So don't get sucked into this. That's all I can say. Right, and this even if we wanted to buy it, this is not a place to buy it. So thanks for asking about gold and the dollar. I hope that helps. Okay, so gold USDT, something going on with that precious metal, right? So your point of view on gold, right? Okay, so just went over that. Hey, HS, good to see you. Bart, good to see you. ¿Cómo estás? Hey, Winter. Okay, I'm just getting back. I'm just catching up on the chat here. Let's see, from Romania. Okay, Winter. Hey, all right. Schwartz, there's Winter and Schwartz. You guys must be friends. Because he's from Romania too. He's my international man of mystery. Okay, Savi from Brooklyn. Let's take a look at Litecoin. Litecoin's been doing something. Look at this Litecoin situation. I'm guessing there was news, right? When Litecoin was up, all this vertical move that we saw here. If you had some Litecoin, I hope you sold some of it because look at this situation. We have this bearish pin bar. Okay, and right now, that's really all you should be paying attention to. Yes, we have this little inside bar situation developing, but not after that bearish pin bar. I wouldn't go near this thing. Let's look at the support levels, right? Especially in light of what Bitcoin is doing. You have a support right here, which is what? 202. So you could round that to 200. That would be the first area of interest. If that gets taken out, you're looking at this area here, which is what? What is the high here? Let's see, 200, no, that can't be right. Hold on, I read the number wrong. I'm sorry. This first support is 229 or 230. I'm sorry, I can't see anymore. Okay, so that's 230, and then it's basically 200, right? In this area here, the high is around 207. Yeah, so you could round that to about 200. These are your support levels for Litecoin. And if those levels are taken out for whatever reason, you want to step aside. Again, Litecoin is typically a follower, so I don't know what the story is with this. I think in these type of situations, you're going to see a lot of these type of dramatic random moves out of nowhere, because that's typically what happens at the top of a market, right? Money just jumps into something. Again, if you want perspective, just take a look at a weekly chart, and this is where Litecoin is relative to its previous all-time high, right? I mean, it's not even close. In fact, what is that, about 50%? It retraced about 50% of this move right in here, something like that. So definitely not a good place to be buying Litecoin. Definitely a good place to be taking profits if you have some profits in this thing. And if you want to try to hold on to some, again, if you're an investor, then it's always a good idea to maintain some inventory. But when you have opportunities like this to get out at resistance levels, I mean, look at just going back here, look at this, right? That's clearly a resistance area. So yeah, you went through it, but it's still in the vicinity of the area, right? What price was that? What's the high here? Basically 250. So good place to take profits, right? And then see if you can get a pullback on this thing. But I wouldn't be too excited about these things making spectacular moves from here. All right, we need to get to a cycle low, and that may be coming next. So there's no way to know for sure. The market's going to have to prove that. But what I'm focusing on here is the risk around these levels, and I don't like the risk at all. Hey, Farhat, good to see you. Okay, okay, thank you. You too. HS, can you cover silver, gold, and Theta? All right, so I covered gold. We can take a look at silver, XAG, USD. So silver is typically a follower of gold. Look, silver's a real pain, okay? It's a real pain, but it broke out, kind of like that gold situation. But with that dollar, I don't trust these things at all. I don't know where these things are going, because the dollar is eventually, if the dollar continues the way that dollar looks, these things are just going to get caught somewhere, right? You're right now, look where you are here. You're right now inside of these two. You broke one resistance, right? You have this other one right here, this old support at around 25.70, around there. You're fooling around there now. So great place to take something off the table if you got into some of that. A nice high or low here. Silver certainly has a cleaner chart than gold, but if gold fakes out or gives it back, this is going to give it back too. So I would not be buying silver. Okay, I would be looking to get out of silver if you have some. I mean, if you're thinking short term, if you're thinking swing trade. If you're thinking long term, and usually these metals are better for like a long term. I mean, look where you are on silver, right, on the weekly. You're in the middle of the range, okay? So this is why you need to keep these charts, like you need to keep things like this on your radar, because a couple of weeks ago, maybe not more than that, maybe like a month or two ago, silver was at its range low, okay? And that's really a time to collect some inventory when these things touch their range lows. Of course, after the fact, we can say that, because now we can say, oh, look, it's so much higher. But those are the levels you have to pay attention to, and that's really where you want to accumulate some. And of course, when it gets to an area like where it is now, this is where you want to distribute some, take some money off the table while you can, and then see if it can work its way back to the range high. I mean, anything is possible, but at those range highs, you want to be selling, not buying. And maybe at some point it'll break out, right? But the whole point of being an investor is to hold on to some to try to participate in that, because, I mean, that's where the big money is made as far as investing goes, is staying in for these really big moves, which is not easy to do. So, but if you're managing inventory throughout the whole cycle, meaning near the lows you're buying some, okay, this is not an altcoin when we're talking about silver here, okay? When it gets to the middle of the range, you unload some. If it goes back to the low, you buy some back, that kind of thing. And meanwhile, maybe you have a scheduled purchasing thing where, once a month you buy a little whatever, so you're building an average price. For something like that, if these things go nuts over the long term, sure. But just keep in mind, and this is what people don't realize, because we get stuck on the chart and we think, oh yeah, this chart looks like it's going to do this. This chart, silver can get back to $50 or whatever. If the dollar continues the way it's going, and the Fed starts raising rates, which they have not done yet, right? The dollar is just pricing it in early. When the Fed starts doing that, these things are not going to be doing anything. All right, just keep that in mind, because if a rising rate environment, you're going to see these things go back to their lows or whatever. I mean, I don't think silver or gold are going to go to zero, but they're not going to go to these spectacular highs that all the fake gurus are going to come out, all the fake gold and silver gurus are going to come out and tell you, yeah, gold's going to 5,000. Blah, blah, we're going to have hyperinflation. They're going to be printing money on toilet paper and blah, 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 right? They're going to say that stuff. And meanwhile, gold touches 2,000 and next thing you know, it's back to 1,700 in a few months. So in a rising rate environment, I would not expect any of those crazy outlooks or those crazy expectations to hold true when you have a rising dollar, right? Just something to keep in mind. If you're thinking short term, that's a different story. All right, so I hope that helps. Now, you mentioned here Theta. All right, we'll take a quick look at Theta. So Theta, now look at this situation right here. So Theta, and a lot of these coins have been in this situation. I've been pointing these out, right? So you have a resistance right in this area here. And a lot of these coins recently, right, you have another resistance in this area here. So a lot of these coins have been showing green candles off of what looks like to be a generally bullish structure, higher lows and higher highs, right? So, and they never pull back. But the thing is, they linger in resistance areas. So all you need is a pullback on Bitcoin, because Bitcoin and Ethereum have been pushing their highs. If you have a junk coin that, and I mean, is Theta a junk coin? I don't know. I mean, I'm familiar with their network and all that stuff, but I don't know what to make of this thing as far as their big promises and this and that. My point is this. If Bitcoin and Ethereum are making all-time highs and these coins are struggling or just flirting with resistance levels, that's relative weakness. I mean, look at the all-time high on Theta. What is that? What is this? $14 or $15, whatever that is? Not even close to relative to what Bitcoin is doing, right? And Ethereum. So this is not good. If you're long something like this, certainly you don't want to see something struggling at a resistance level while the whole world is having a party. Because when Bitcoin really turns, these things are going to be the first ones to sell off, right? Because that means no one's buying them. They're relatively weak. Visionary, oh, sent me 200 coins. Oh, thank you so much. I'm not even on TradingView. I'm fixing that situation, by the way. I plan to get back on TradingView. I just have this software, blah, blah, blah. I'm not going to get into all the details, but I will be back on TradingView, okay, eventually, soon. So thank you, Visionary. Thank you very much. I like streaming on TradingView, but it's just they made some kind of change, and it really threw off my whole setup here. So anyway, so that's the situation here with Theta. You don't want to see something like this, and there are a lot of coins in this situation. All right, so just something to keep in mind. Thank you very much, Visionary. I really appreciate that. Thank you. Okay, so let's see what else we got here. So that was HS. Schwartz, can you take a look at AR USD? Okay, and the USDT. Okay, so AR USDT. Let's take a look. What's going on here with that? So perhaps this is all a reaction to the US dollar. Maybe it is. I mean, usually these things don't seem to react to that, but whatever. I don't question those things, right? So you have the pullback off of after the breakout. This is what I warn about with those breakouts, okay? Just look, let me show you something here. Just the other day, it looked like this. A few days ago, looked like that, right? And a lot of coins looked like this. They're going to go higher forever. And oh, there's a YouTube video. You're going to 50x on this thing by tomorrow, right? Blah, 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 blah. And then you get this. This is why I warn about these things. So the first sign of that, the first clue was the fact that you get a red candle that gave the whole thing back like right away. That is not a sign of bullish momentum. So here you are, it basically broke this little consolidation, broke lower, and you are now testing an old support, an old resistance area, right? This old resistance, which is now theoretically a new support. The thing is, this current candle should not be doing this into the support. The previous candle was a bullish, oh, actually that's a doji, right? It's not a bullish pin bar, it's a doji. You got a little reaction off of it, you see the tail? But that reaction got covered up by this candle here, which is now a bearish inside bar. So nothing to do here. It's a good location for a swing trade long, all right? It's a good location, but there's no confirmation. In fact, if the candle closes like this and the low is taken out, then that would be a sell signal and this thing can test lower. So your next support on something like this is going to be around here, which is what, $60? $60.50. So just something to keep in mind there. That's what it's saying. So that's why I tell people, if you took the breakout and it gives you a hard time, be prepared to adjust. It means you have to babysit this thing. You may have to get out and get back in. You know, it requires a lot of attention because you don't want to get caught in this. Now, if you don't have a large position and you don't care if it goes back there, then it's a different story. I speak from the swing trade perspective mostly. Now, let's just kind of zoom out here and just look at that bigger picture there for a moment. I mean, the general structure is bullish, but this can change very quickly if money really starts coming out of this whole sector. Now, there's a guy, I think it was Kai or someone else pointed out a couple of times this total 3, which is basically the market cap. And like I mentioned, I don't use these charts. I mean, it looks exactly like Bitcoin, basically, right? Even though this one does not include Bitcoin and Ethereum, the chart looks exactly like the Bitcoin chart, pretty much, or Ethereum. I mean, it looks almost like Ethereum. And it's interesting to see how, you know, if this thing breaks, let's take a look at just total, right, which I guess includes the whole bunch. It's basically the same. So I don't use these charts, but what I think is interesting about something like this is if this chart starts breaking supports, which it has not done yet, okay, so that would be around this $2.60, whatever, 2.62. I don't think it's dollars, $2 trillion, whatever that market cap is, this area right there. If it starts taking that out and it takes out this support here, when you start to see those breaks, then we're probably in a corrective cycle, okay, meaning it will probably persist. It won't just return, like it won't reverse like it's been doing and make higher highs. So just something to keep in mind, because something that's generally strong should not take out support levels. So just something to keep in mind, all right? Again, I don't like to use these because I don't like to have an extra layer of complexity, but I think it might at least give us like a good heads up if this party is over. Same way that I use the S&P and the NASDAQ to judge stocks. All right, so anyway, just wanted to mention that. Thanks for asking. Let's see what else we got here. Okay, so that was AR. All right, hey, stop fooling around. Stop fooling around. Stop fooling around. Okay, no problem. ETC USD. All right, ETC, Ethereum Classic. This thing still exists. So I have to say that because Ethereum went to like what, 40, whatever, almost 5,000. I don't know if it actually touched. I don't even look at that Ethereum chart too much. But let's just take a look at a weekly chart here of Ethereum Classic. Okay, look at this. So this thing has made like no progress at all. It's basically stuck in the middle of this range, nowhere near any of these previous highs. All right, so that's a bad sign right there. That's a sign of relative weakness right there. It looks like it established a lower high off of that recent outside bar that we see across the board. What about Ethereum itself? Has Ethereum actually reached 5,000? No, 48.67 is the high. All right, and look, it looks like you get the inside bar to go long, but I would not. I just have no faith with the rest of the coins starting to turn like that. This is going to try. If this thing fakes out again, you know, you're going to have a double top. I mean, let's just go back to the Ethereum chart real quick, because now the reason why I'm showing you Ethereum along with Ethereum Classic is because they should be following each other. Look at the weekly chart on Ethereum. Look at this. I mean, it's ridiculous. This is ridiculous. And if people think that this is just going to do this, it's just going to do like this. Right, hold on, let me draw a little box in there. They think, oh yeah, it's Ethereum. It's going to go to 10,000. I mean, I'm willing to bet that you'll get a bearish pin bar off of something like this. Kind of like you got back here, okay? You don't have it yet. It's not there yet. So there's no reason to be rushing out of these things. But as soon as that bearish pin bar develops off of such a high, again, this is the weekly chart. Like, this is not a bottom. This is not a low. This is a place that usually is a good place to take profit. So my point is, with Ethereum Classic, if Ethereum looks like that, okay, and ETC can't even get out of its own way, then this is relatively weak. So as soon when Ethereum sells off, which at some point it will cycle like everything else, it will pull back. This thing's going to get hammered theoretically, okay? Especially this. Does this coin even have any utility or any use at all? It's just like a joke. I remember this one years ago. It was a joke. It's still a joke. Sorry. I hope you're not in it. But anyway, that's the situation there. It's showing us signs of relative weakness. Okay. Just so you know. Okay. HS. All right. Cool. No problem. Winter. Store J USDT. Okay. Store J USDT. All right. Let's take a look. So what's going on here? All right. First thing I want to see is the bigger picture. So this chart, now we looked at some charts that had like a nice bullish trend, right? Now this is not so nice. If you look at this back here, we have a resistance area right there that price has reacted to dramatically. Look at that long tail. So now it's pulled back. So, and again, this could be the product of hype. I don't know what the story is with this thing, but there's been so much hype in this space. This type of price action here is typical of hype. And the only people, like I said, that are getting rich in that are the developers and all the insiders, and they're getting rich off of you. So it's pulled back to an area of interest. Okay, fine. I'll give it that. It's a potential higher low. You have an old resistance here, which can act as a new support, and you have a bullish inside bar situation developing here. So how much is this thing? $1.52. Okay. Now, this looks very similar to that Bitcoin situation. All right. In theory, this thing should make the higher low. Okay. If you get the buy signal, meaning this candle needs to close, and the high of this candle, the green candle, needs to be taken out, which doesn't look very hard for that to do. It's a very small candle. Your stop would have to go below this low here. Okay. What is that? $1.36, something like that, because really it has no business going back there if this higher low is going to be a higher low. Okay, and then you'd have to see if this thing can make another run for the high. But I have to warn you, if this was the result of hype, if this was just one big hype candle or whatever, then there may not be much of a catalyst for this thing to build that next leg. Because again, most of these coins that we're seeing that are making these type of wild moves, it's a result of marketing, basically, right? And if that's the only catalyst behind the coin, then that means there's no real catalyst. So I don't want to discourage people from taking trades in these things. Just make sure you are careful with the risk, because you have to treat these things like lottery tickets. You have to treat them like a big casino. And when you have a win, you have to take a good portion of that money off the table. You know, often greed will step in and you'll be like, oh, you know, I'm at 5x, but I think I can get 10x out of this, especially since that fake guru told me that I can. And you have hope and you try to hold it, especially since your friend made $10 million in SHIB, right? So you figure this is going to be the next SHIB or whatever. These ideas may be floating in your head and you don't realize that you're being affected by them. So that's the way you need to treat these. Be very defensive, and you see a buy signal, you want to go for it, okay. But let's just take a look at SHIB real quick, speaking of which, right? Take a look at SHIB. I mean, it's trying to give you a buy signal. Look at that, right? It's a similar situation, but it tried to give us a buy signal previously too. So this was an extreme hype coin. There's particular people on YouTube pushing this coin. And that's the only thing that you have behind it. Now people go, oh no, they have a really good project. And they're going to do this and they're going to do that. No, it's a meme coin. Okay, it's a garbage coin. And it's being driven by YouTubers telling you how great this coin is. So this, for example, could turn into a nice buy signal. I mean, once this candle closes, the high of this candle gets taken out. What is that? 57.98? 57.98. That would be your buy signal. Your stop would have to go below this low over here, okay? And then you have to hope for the best. You have to hope that the hype people start coming out and saying that SHIB is going to go at 10,000% again and all this other nonsense, and Elon Musk is going to tweet about it, and he's going to accept SHIB for his cars and blah, 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 and you'll be a millionaire, just like Seinfeld. Okay, so the signal is there, it's developing, but you have to decide if you want to play that game. All right, so I hope that makes sense. Anyway, I brought up SHIB, you asked about store. Anyway, I hope that helps. Okay, Alex, ZIL. Okay, like the new format. Okay, cool. Well, I'm glad. Again, I made that adjustment to basically have the ability to answer more questions, right? I mean, that's the whole idea. The whole idea of the stream is to provide value to the listeners here, not to sit here and think I'm all smart because I'm doing analysis and, you know, I'm a Wall Street guy and I'm going to give you analysis that you don't care about. Okay, so here's ZIL. And here's, look, this situation right here. Let's just go back. Look at these levels. Look at these levels, right? This is not a coincidence. Look at this. So you have all this resistance over here. It looks like price has reacted. You have a lower high established. Now, just like I was saying with some of those other coins, Bitcoin, Ethereum, right, coming off their highs. I mean, Ethereum is almost back on its highs, and these things are nowhere near. They're nowhere near their highs. Where is ZIL's high? I mean, let's look back here a bit. Look at that. That's not good, okay? The all-time highs are way up here, and this thing is basically one giant lower high. So that's a sign of relative weakness. I certainly wouldn't be building inventory in these, okay? Certainly not when they're looking like that. These are total, I mean, it's relative weakness. I'll just put it that way. Relative weakness, which means if Ethereum pulls back and Bitcoin, they have like a real pull. We haven't even seen a real pullback. Okay, 4,000 or 5,000, 6,000 points, that's not a real pullback. A real pullback will be about 20 or 30,000 points. That's a real pullback. I don't think we'll get that in one day. But when we see a bearish cycle, something like this is going to get hammered. Based on the way this structure looks, this is going to get hammered because it's relatively weak. So the signs for that would be the support's getting taken out. So the fact that you have a lower high in place, for one, means I would ignore any kind of buy signal that develops here. I would ignore it. I'd be watching for these supports to get broken. Once they start getting broken, party's over with something like this, because that would confirm the lower high. If you're in something like this, that's something to keep in mind. Perhaps you can manage your risk with that information, but there are much better coins to be buying. Now you can argue and say, but there are higher lows. Yes, there are higher lows, but the larger structure is not favorable at all. This larger structure, I mean, look, Ethereum doesn't look like this, right? We saw that Ethereum chart. Some of those other charts, what was it? Some of those other ones that we mentioned here, AR or whatever it was, they don't look like this, okay? They at least some of them have nice bullish structures in place. This is not a nice bullish structure, all right? Just to keep in mind in comparison. So thanks for asking, Alex. Okay, Bart, can you tell us about the metallurgic sector like XCX, okay, in regards to the new infrastructure law and what we should expect from those fundamentals? All right, good question. So U.S. Steel, all right, X. Here's the thing with all that infrastructure nonsense. I call it nonsense because it's so political, right? It's very political. A lot of politics around that whole thing. And the market prices something in, and then it prices it out. Then it prices it in. Now look at this. So something like U.S. Steel. Look at the bigger picture. So the general structure here is bullish, okay? I mean, clearly higher lows and higher highs. But the midterm structure here is range bound. So, and you're nearer the higher part of the range. So with all that news and all that hype, you have to realize with that infrastructure stuff, whatever they're coming out with or whatever the law they signed, blah, 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 that means it's priced in. So if that's priced in, that means it's buy the rumors, sell the news, right? So look at if you notice, it peaked a few days ago off of this possible, range high. And it's trying to come back, but there's no breakout here, right? It hasn't broken this resistance. So I would be very cautious with something like this, right? Just because the bill is out and blah, 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 should be good for these companies, well, but that's it's priced in. So I would be anticipating, weakness, not strength because of that. Now, it doesn't matter what we think or what we anticipate. It really matters what the market does. So there's two scenarios for you, Bart. If it breaks out higher and can clear this resistance, then that will be signaling that the broader trend, the broader bullish trend is continuing, right? So what do you do in that situation? Well, if you want to try to buy the breakout, that's one thing you can consider. I'm not a big fan of those breakouts, but that's one thing to consider. You can also wait for the range low or something. That's more of a conservative way to go about it. I think a smarter move. Now, keep in mind, something like U.S. Steel. Now, I don't know what their balance sheets look like and all that other stuff. I mean, let's take a look at the other one, FCX. I mean, they're like in the same business, right? FCX, is that let me see, get the symbol right there. Yeah, FCX, it's Freeport, right? Okay, so now look, this one's trying to break out, but this is more likely based on the gold move, right? Because they mine copper, they're like into mining and stuff like that. I think they're into the gold and silver and whatever too. So you have this breakout for that. Okay, fine. But as far as driving these things further, what you have to watch out for is the rising dollar, because if the Fed starts raising rates, companies like these companies, if they borrow a lot of money to do what they're doing, then they're going to have a problem, right? It's going to eat into their profits. So you have to be careful of something like that. And you'll probably see these things get stuck, right? Like at resistance levels and not really go very far. So look for the better chart. This is a much better chart than U.S. Steel because you have that breakout, and obviously because it's being driven by slightly different reasons. I wouldn't get too caught up with the logic that comes out of, oh, infrastructure bills should be good for the stocks and blah, 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 blah. Because there are always other variables that you may not consider that may have an effect. And that's why it's just focus on the charts, right? But that's really what I would just do. Focus on the charts. Maybe what you can do is take some of these, put them together in a group, right? Like CX. Look at this one. This one sucks compared to the other ones. Look at that. What's the story with this one? So, yeah, this one doesn't look as good, right? Lower high, possible, it's been in this corrective move here. I mean, generally it's been strong. They've all been strong, but you notice they've been giving it back, some of these, right? Why is that? So is it because the stuff is priced in and the party's over? I don't know, especially if we're going to rate hike mode, which is what the dollar is telling us. So just something to keep in mind with those, right? Yeah, so I hope that helps. Let me just go back to what was that chart originally was X. Right, so I just hope that helps. Keep an eye on these levels and see what kind of price reactions you could get at those levels. And I would think that in general, if we have the inflation and we have all that other stuff, then these things should continue higher, right? Because they should benefit in such an environment. But if we have the opposite of that, then when they start reporting, company profits are less and blah, 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 and this and that because interest rates and blah, 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 then you'll see it start to get eat into these things, right? So just be careful with that. I wouldn't think long-term investing here. Again, whenever you think long-term investing, just pull up a weekly chart and say, well, are we at a low or are we at a high? I mean, these are good companies, right? U.S. Steel, it's a good company. It's not an altcoin. So are we at a low or are we at a high? This is clearly a high of some kind. It's not the high, but it's a high. We're definitely not at any type of near to short-term low at all. So you want to pick up these things when they really get hammered, right? Or they're really looking ugly. I mean, U.S. Steel was looking pretty ugly a year and a half ago at the bottom of the market, right? Those are the time to pick these things up. Or if you're investing throughout the whole cycle, right? You're just building inventory. Okay, these would be periods like this would be time to at least get out of some and then see if it breaks out. High or low should lead to a higher high, but you have to watch out for that dollar situation. All right, I don't want to get too much more into that. Thanks for asking about that, though. That's what I think. Again, I'm not a big fundamental guy, as you can see. Okay, Mr. Banian, greetings from Transylvania. Oh, how do you see dollar? Okay, so I talked about the dollar before, and I mean, oh, this is the weekly dollar. Okay, the weekly dollar. Look at that move. That's the weekly dollar. And sure, we can argue that the weekly dollar has got some resistance ahead of it, but the fact that it made it this far on this type of move, I mean, man. So that's pricing in, rate hikes, in my opinion. And this thing is relentless right now. It's just vertical. So I would just stay out of this thing's way. Okay? It'll pull back at some point. Everything pulls back. It'll pull back a little bit, and your support on the dollar is going to be this 94.5 area. That's probably going to be a good place to be selling things like the euro and the pound, because they're going to have their little bullish little reversal, and then they're going to turn. They're going to start to turn, and that would probably give you a good selling opportunity, right, in those currencies. So thanks for asking. Bruno, I'm participating all the way from Hamburg. Welcome. Welcome, Bruno. It's nice to see you. Please, no casuals, okay? Can you look at Z? Sure. Wait for it to bottom before possibly entering, maybe around $63 if it shows support. Let's take a look. Oh, yeah, look at that. So this looks like the result of a bad report. How many of these have we seen recently, right? We've seen quite a few of these where you get this big gap like that. So in this type of situation, yeah, let's take a look at a weekly chart real quick. What's going on here in the bigger picture? Look at this. This thing peaked a while ago. I wonder what that says about the home market. So this thing is near these lows. You have a old resistance. So you are at a supportive level here on Zillow. I mean, this is a long-term level, right, that you don't get to see very often. So like as far as investing goes, I mean, this would be the place to think about something like that, because this thing is hated right now. So your question is, wait for it to bottom. So if you're interested in a swing trade, yeah, waiting for stability would make sense. It's trying, as you can see, but you're probably better off waiting for something much clearer, like a clear double bottom or something. This is sort of, but you have all this problem right before you here. Like, this is a problem. And this area, this gap, is also going to act as a resistance. Typically, these act as support or resistance levels. So a conservative thing to do, if you want to wait for this thing to really stabilize, is let it break into that gap and let it give you a higher low and let it prove that it really wants to start turning around. But something like this is probably not the best for a swing trade. You want to think more of like inventory. In these type of situations, this would be a good time to maybe start putting some inventory away in your portfolio. How much is this thing? So look at $63. So maybe you buy a few shares, right? What you have to do is you have to decide some sort of target allocation. Maybe it's $10,000 you want to invest. Okay, I'm just making up that number. And so maybe you want to do is invest $1,000 a month, or maybe $500 a month. And now you're going to spread that out over 10 or 20 months as you start to accumulate this thing near lower prices. Maybe this thing goes another 10 points lower while you're accumulating. But this is the time to do it, right? When it looks ugly, they had a bad report, blah, blah, blah. Now, keep in mind, if the Fed raises rates, it's probably not going to be a positive for something like this, okay? Because they depend on easy money, obviously low interest rates, to push homes, okay? So anyway, just something to keep in mind. This may be like a long-term play, maybe a couple of years out or something, meaning you're buying some inventory. I don't know, they probably don't pay a dividend. It would be nice if they were paying you to hold on to it, but you get the idea, okay? So if that's the situation and the outlook isn't that good as far as, because again, keep in mind, the Fed hasn't even begun to raise rates. So when they do, of course, it'll be priced in. Their rate hikes will be priced in. And then if the Fed comes out after like a rate hike, they have their FOMC meeting and they say, okay, we're going to raise rates 25 basis points, blah, 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 right? They say that. And then they're going to have their meeting and they're going to say, well, probably the next few meetings we're going to raise another blah, blah, blah because of target inflation, blah, blah, blah. And then that's when the market's going to continue to price more of this stuff in. All right, so just something to keep in mind. The first rate hike would probably not have much of a negative effect because it's being priced in now. So just something to keep in mind. This thing here, if we go into a rising rate environment, this thing is probably going to be depressed for a little while. So just keep that in mind when you're dealing with something like this. This is where a fundamental piece of information like that could be important because it will affect company profits. This is not like a garbage altcoin that's being hyped in a chat room. It's just something to keep in mind. All right, I keep saying that. All right, anyway, so thanks for asking. That's Zillow. Let's see what else we got here. All right, just going through the chat here. I'm sorry if I'm a little slow. Going through the chat. Can you check out QS? Sure, Sean. In a long call, 32 strike, planning an exit. Still, okay. So QS, QuantumScape. So you're long, you have a 32 call. Let's see, where is this thing right now? At 39.70. Okay. So yeah, this thing, wow. This thing really got beat up for a little. I haven't, yeah, this thing has come back nicely off of that situation. So all right, so Sean, to answer your question, this is a nice candle today. You have a nice higher low in place, going for the higher high. There's really nothing to do here. I would say hold on to that. Your resistance is, you're in a resistant area, okay? You're in the resistant area. No reaction to it yet. So just want to keep an eye on it. I mean, since you're in a call, obviously you can't, partial out of your call unless you have multiple calls. If you have more than one, hey, it wouldn't be a bad idea to take a little off the table. But at the moment, there's nothing to do here. That's a nice strong close. There's no pin bar. You don't have a bearish inside bar. Nothing. There's just nothing. So I'd say let this thing ride. Let it pay you some more. And wait, I say wait until it gives you a reason. And your reason could be somewhere inside of this zone, right? Like inside of this zone here. That's where your reason may appear. Maybe that's where you get like the bearish pin bar, or you get some sort of reversal pattern in that area. Then maybe that's where you want to get out of your call. How long? See, did you put the date on that? In that you have a 32. Okay, planning to exit. Okay, right. So I don't know how many months you have on the call, but I would certainly. There's nothing to do right now. Okay, so good idea to plan to exit. Just let it give you a reason. Let it give you a reason to exit. So thanks for asking about that. Nice chart. Very nice chart off of a consolidation breakout there. All right. So let's see. Bruno, SHIB. I went over SHIB. All right. See, I beat you to it. Okay. What did you take when, what lesson? Oh, that's an interesting question. When the dot-coms, okay, I started out at the height of the dot-coms. I mean, back then when I started out, it was kind of like this period now where making money was just like a normal thing. And you assume that because, I mean, the firm where I worked, there were about 300 guys in that office or something like that, and everyone was making money. Okay, like, I mean, a lot of money. It was nuts. So when you saw that on because you could see people's computers. Back then, we had like an actual desktop computer with CRT monitors and all that other stuff. So you could see the P&L on people's screens, and they were nuts, right? So when you start out like that, and then it all just goes away, because I was in it for about maybe 2 years, right? And after that is when it all went away. The lesson that I took away from that was, for one, nothing is forever, right? Everything is temporary, especially situations like that, where we had a very unusual advantage. That's why everyone was making so much money. It wasn't because we were all skilled or we were smarter than everyone else. We had a very particular advantage, which was taken away. So you have to realize that. So one of the main things that I've learned from that time is, in order to beat the market, you must have a very specific and well-defined advantage. If you don't, and you're making money, however you're making that money, it's going to go away, right? Because if there's any type of like imbalance or something that's allowing this money to be made, or like for example with Bitcoin, right? It never pulls back. So all this money keeps pouring in and pouring in. People think, oh, it's easy. You just buy some, you buy, pull back, and then blah, blah, blah. Well, when that changes, no one's going to make money anymore, right? It's temporary. So that's what you have to realize. And you always have to be prepared to adjust. So after that time, you have to understand, back then, we didn't use charts. Trading with a chart back then, like that was a very foreign concept. We're talking the year 1999, the year 2000. We had one chart. We had like a charting computer, and it would be between two guys, right? Everyone was sitting next to each other, and it'd be one charting computer. And on that charting computer, we would have one chart of like Microsoft or something like that. And it was like a simple line chart, not even candlesticks. and we'd had some quotes on there, and the whole idea was just to get a sense of where the market was. We used to rely on the level 2 quote. That's how we made money, because it was that clear at that time. So yeah, you have to realize, you have to be prepared to adjust. And when I came out of that, I had no idea how to make money, how I even made any money that I made, and what I was doing. So I had to basically start over. And the problem was I had all these bad habits because I was used to a much different environment. I was very reactive at that time, and I couldn't even imagine holding something more than, you know, a few minutes, never mind an hour or one whole day. I couldn't even imagine it at that time, because that's how things were, and that's how I was originally trained, was to react to things. Okay, I'm the complete opposite now. So anyway, yeah, so good question. Thanks for asking. I hope that answers your question. Let me see what else we got here. Just going back to the chat. So basically, I had to basically relearn everything, and it took me to unlearn all my bad habits. It took me about 5 years to learn the basics of what I know. It took me another 5. So it took me a good, I'd say about 12 years to get back to, I can see some consistency in my swing trading and all that kind of stuff again. It took me a very, very long time, and it wasn't fun. I'll tell you that. All right. So Juan from Berlin. ¿Cómo estás, Juan? I don't know if I should be speaking to you in Spanish or in German, but okay, from Berlin. Thanks for joining. ING. Hey, what would you say about ZIL? Okay, so I covered ZIL. If you go back in the stream, what's Wisconsin? Green Bay. What's going on with Green Bay over there? I like that team. All right, can you comment on OZSC? Okay, OZSC. All right, so I guess this is a stock. All right, so let me see. Is it a coin? OZSC. Yeah, usually coins are. Yeah, okay. So it's a stock. Now, interesting stock. Let's look back a bit here. How much is this thing? It's 5 cents. Okay, so we're looking at a penny stock here, basically. Now look at this price action. Let's look back here a bit and see where this thing came from. All right, when I see this, okay, this right here, this is hype. Okay, so, and it gave it all back. This is typically what happens. This type of action that you see here, and by the way, we saw this in 2017 with most of the garbage altcoins that were all popular back then, right? They all pretty much pulled one of these. So we're going to see that again, by the way, because that's just a cycle. So this thing is consolidated for a long time, and it's just starting to perk up now. So what do I think of this? Well, obviously it's being hyped again, because the Nasdaq and S&P came off of they're coming off of all-time highs, and this thing is just perking up now. So no way. I wouldn't have a high opinion of this thing, first of all. Second of all, you're at this little resistance right here. So I'm guessing there's some news behind this or something that's getting this thing going, getting everyone's attention. In this type of situation, technical analysis is not going to be as useful when you have this kind of stuff going on, right? Especially if this has to depend on hype. So you have a double bottom though, right? And you came off the double bottom. So if you want to get involved in something like this, either you go for the breakout. Again, it's a sub-dollar. It's like it's a penny stock. You buy a bunch of it and hope for the best, right? Because look at these spikes that you've had in previous movements here. So clearly they get these things going and then it gives it back. So you may be in one of those situations now. So you can try to buy that breakout and see what you can make with that. But again, this is highly speculative, and most likely you're buying into one of those hype, I'm going to call it a hype spike, okay, into one of those. There's no quality trend or quality price structure here. Now, a more conservative thing to do would be wait for this thing to have a trend mature, meaning it breaks out, it pulls back, and gives you some sort of higher low somewhere along the way and starts to mature in a trend. But again, if this thing depends on hype, you're probably not going to see a mature trend. You're probably just going to see these spikes. So until it demonstrates something like that, I would treat this basically like what it is, a penny stock, okay? And I wouldn't have much faith in this thing. Because whatever this reason that was driving it before is no longer the case, because otherwise you'd see that again. And I know people are going to say, oh, it's the beginning. Oh, this thing's going to go to $10, and you're going to hear all kinds of other garbage. that when they're saying these things, because they want you to buy into these things, because obviously someone bought a lot of it and they need to get out. That's usually the case. So I would watch like that level right there and see, you know, if it clears that level and starts to mature into a trend, maybe you have something. Otherwise, there's not much. I wouldn't expect much from something like this. It's basically like an altcoin. I would treat it like that, or a penny stock, right? All right. Anyway, so thanks for asking about OZSC, OZOP Energy Solutions. Okay. Okay. Hey. Oh, Daniel, good to see you. ING. How about VET? Okay. VeChain. Let's take a look. VeChain. So VeChain. This one. All right, so look at this, right? All of these things got affected by that Bitcoin situation. I'm not very surprised. I saw a hype video on VeChain on how this is going to make you a millionaire. So let's just look at some levels here, okay? We get VeChain. I get this one asked a lot, and this is what I warned about with something like VeChain. And there are other coins in a similar situation. You see this zone right here? The entire zone is a resistance zone relative to previous price action, relative to this price action back here. So you are, when the price broke into this zone, looked like it was going to break out and just go higher forever, okay? But then it stops, it gets stuck in here. And now at the moment, yeah, you have this inside bar developing, just like Bitcoin, and it could be a higher low. It's possible. But you're going to have to take that same type of risk that I described in some of those other coins that are in a similar situation, like Polkadot, for example. So your risk would be defined from here, from this low. What is that? 14 cents. Current price is what? 16.5. So you're looking at what? 2.5 cents of risk, something like that. And that's assuming that this candle closes and the next candle takes out the high of this candle. Okay? That would be the buy signal. And after such a signal, you need the next candle to do this. If the next candle does not do that, or at least stays green, okay, then you're basically buying inside of a resistance zone. A resistance zone that has been acted upon, meaning you see there's some red candles in here. First it started with the bearish pin bar, right? Now you have this outside, but actually it's not an outside bar, but you get the idea, this long tail doji situation over here. Okay, it's similar to the outside bar that we're looking at in some other coins. And this thing can start breaking supports. So I think it's a high risk location, just like that Bitcoin setup that's developing. I think it's a high risk location, and I would be very, very careful. If you want to be aggressive and try to go for something like that, if it gives you the signal, then just keep in mind the failure could be right around the corner. And your support is here, right? That's your next support, which is what, 1436, around there. And if that support breaks, right, that 1436 level, then you're looking at this area here, okay, right around this area. Here, let me draw a line there, right around here, which is what, around the, I guess you could say around the 11 cent, maybe 10 cent area. You want to give it a little more room. That's what you're looking at with something like this. I mean, the general structure is decent, but when we look back, and again, back to the weekly chart, look at this, right? Look at this. So while that general structure looks decent, this is what you're looking at on that daily chart, right? This green move here, now we're getting bearish pin bars. This is not what you should see on a weekly chart. So if this sticks and we take out that weekly low, these things are going back into, you know, bear cycle, most likely. So just something to keep in mind. The risk is high. All right, so that's VeChain and all the other ones that look like that. Visionary. Hey, Visionary. Oh, okay. Cool. So yeah, again, Visionary, I'm just getting to your thing now. Thanks again for the coins. Like I said, I am going to get back on TradingView. And I'm sorry that I'm not on there. The technical situation is I have to jump through too many hoops, and I just can't get stuff done on time. So, but I'm fixing the situation, just so you know. Okay. SPY, sure. So first let's take a look at the SPX, which is it's a much cleaner, it's the same idea, right? Here's the SPY. But this chart is kind of, you can see there's a lot of gaps and things all over the place. So I like to look at the SPX to get the idea. It's the same, basically it's the same chart, but you can see this one's more filled in. Now, this move on the SPY or on this S&P 500, I think is nothing less than ridiculous. And I think it's a result of stimulus, blah, 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 and the irresponsible Federal Reserve. But my opinions don't matter. So let's look at what is the chart telling us? Well, we came off this high, the all-time high. We came off the high, and we have an inside bar developing now. Okay, here's the thing. We're still like in holiday mode. This thing may give us a buy signal tomorrow and may try to put in another leg higher. I mean, that's the way this market has been, right? You may see something like that. This higher low may stick. So you have to see what the market decides to do. If we take out the low of the inside bar and we take out this large candle low, we take that out, then we're probably going to test lower. But I would not call this a bear market just yet. We have supports that go all the way back to, what is this, 45, 49. So on the SPY chart, let's just go back to your SPY chart here for a moment. I mean, just the numbers, the chart's the same, the numbers are going to be slightly different, right? You're looking at this level here, 454, right? 454, and then you have this level right in here, which is, what is this, around 458. So those are your levels on the SPY that I'd be looking for as far as support goes to see if this broader structure wants to stay intact. Now, if price can get into this zone, we can even make a zone out of it, okay, like this. If price can get back in there, you don't want to just step in front of it. You want to wait for some sort of confirmation. And it's possible to see something like that over the next few weeks, okay, going into the holidays and all other optimistic blah, 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 right? So it's possible that we see another reversal and perhaps we rally into the month of December or whatever, and we go for a possible high. I mean, that's what the structure says at the moment. If those support levels, especially this one, if these are cleared and price is in this area here and can't recover, that's a different story. In that situation, we may be in, proven corrective mode. And you have to understand, a lot of these Robinhood investors and all that, you have to understand over a 5-year period, right? We look back here, over 5 years, they've been nothing but the hope mode plan. I mean, look at this. The hope mode plan has been nothing but a reward. I mean, look at this. We can go back to 2016, okay? Now, 2016 up until 2020 was one thing, but since then, look at this. So does this look like a cycle low to you or a cycle high? And you have to, I'm going to invest in Apple up here. Go ahead. Have fun. Okay, this is ridiculous. So that's what I mean. Like maybe we get a little mini pullback and maybe we get one more try. But if this thing breaks, which is possible, and it can take a couple of months, this thing breaks, then we're probably looking at a bear cycle. And I would not be surprised. Now, a bear cycle is not the same as a full-blown bear market, but a corrective cycle, right, which is very, very reasonable after such a ridiculous move. I would not be surprised if the signal comes from the Fed and their rate hike schedule and all that nonsense. Okay, that would be, I think, one catalyst. Keep in mind, you can have a couple of catalysts come together. Something unexpected, no one expected that, blah, blah, blah. And, Google goes out of business. I'm exaggerating. Google's not going to go out of business, but you get the idea. Something, unexpected. Something goes on in another part of the world, like China's economy, they have a problem, and now the whole world is affected. You know how that goes, right? That whole thing. So just keep that in mind, okay? I don't like to go by fundamentals and all that, but just keep when you're not sure, am I at a high or at a low? Just take a look at your weekly chart. All right. So that's the S&P. Now Ford. Now I know Ford's been doing some ridiculous things too. I mean, look at this. It's ridiculous for Ford. Ford doesn't even move. And here we are. Now look at Ford on the weekly. Look at this. It's crazy. All right? I guess they're going to be the next Tesla or something. All right. So in this situation, look at this. Bearish pin bar on the weekly. Not good. This is what you don't want to see that. So now just because it's there doesn't mean it's active yet, but look at the low of the pin bar. The low is basically, it's 1906, so we can round that to 19 even. This thing right now is at 1955. So if this thing clears 19 over the next week, then it's pulling back, most likely, okay? And the next support, because this vertical move, I mean, what is Ford? An altcoin now? What is Ford invest? Is Ford mining Bitcoin too? So your first support on something like this would be here, 1620. So if you want to get involved in Ford, that would be the place to think about it. Right now is a good time to sell it, okay, and lock in some profits. Again, if you're an investor, as an investor, you don't want to sell everything. The whole idea to benefit as being an investor is you want to hold on to some, right? But certainly you want to lock in some profit here at such a level, and you can always buy it back if you get that retest. If you don't get the retest, you can buy it back anyway, okay? So just in smaller batches. But I highly doubt these things are going to continue in this vertical fashion. It's just not sustainable off of such levels. I could see maybe if we came off of a low, I could see if we were, of course this is easy to see after the fact, but if the chart looked more like something like this, followed by higher lows, and then maybe you break out or something, okay, that would make a little more sense. And of course, Ford is a market stock, so I'd be expecting it to be following the general market. S&P and NASDAQ recently pushed all-time highs, right? Are these all-time highs for Ford? Let me see. Because Ford is a market stock. Are these all-time highs? No, these are not all-time highs. Ford has been higher. But the S&P and NASDAQ pushed highs, and Ford also, broke out and had a pretty decent move following the market, okay? So when the market turns, I would expect Ford to be red as well. Just something to keep in mind. All right, thanks for asking about Ford. That's all you could do with something like that. But you want to invest in that now? So, all right, let me see what else we got. Hey, Kai. All right, cool. Just talking about you earlier. All right, AMC. So AMC is in one of these consolidation situations, right? We all remember this one with all the hype about the short squeeze and all that nonsense. So you have this situation right here, right? These consolidations can be opportunities. Now, something like AMC is not a market stock. It's going to be less sensitive to like what the S&P and NASDAQ do. And something like this is going to be more about hype and, the short float and all that other stuff. Now, it tried to break out the other day, and obviously it gave it back. So that's what you have to watch out with these kind of things. So if you want to get involved in something like this, keep an eye on your range levels, okay? The idea behind this, again, if you get that range breakout, perhaps you get another squeeze type of situation. It can happen, especially if they start with all the, all the hype nonsense and all the day traders pile in. That's the goal. That's what you're looking for. But you want to get in before that, and you want to sell when you get that situation if the market can deliver that. Otherwise, so if you want to try to position yourself for something like that, this wouldn't be a bad place. You're right in the middle of the range, highly random. Anything can happen here. You have a bullish candle close today, so it's not a bad spot. At least you're not getting stuck in the false breakout. At least you're not buying it here. You're like, oh man, this thing pulled back. I could have waited. You're at the I could have waited price. Okay, so you have that. All right, if this thing tests the range low, which is what, 34.86, you have another opportunity maybe to add some more if you want to kind of build like a small position or something like that. If it breaks that range low, then you're looking at this support here, okay, which is, what is that, 28.92? So just something to keep in mind. These things, of course, that's how you would define your risk. So that's why you don't want to get too big too fast. It can do something like that. But you want to buy some, you're looking for that breakout. And if it breaks out, the first area that you want to consider selling would be here, because that's an old support, 51.06. That's a nice move, right? From basically 30, 38, whatever, a good 9 or 10, maybe slightly more than 10-point move. If you're risking about 3, 4, maybe 5 points to go for something like that, again, that would be your first target. And if it goes vertical, you want to try to let it ride until until the party's over, okay? And that's how you get a better reward risk out of something like that. But I like the idea. It's just you understand what you're getting into. It's a highly speculative, you know the deal. I don't have to tell you the deal with this one. But all right, cool. Thanks for asking, Jose. Okay, not mucho gusto. ¿Cómo estás? Okay, Litecoin. Okay, went over in 1 hour ahead and head and shoulders. Okay, so now you're talking about a 1 hour chart, right? Now, thing is, I stick to daily charts on here, and the thing is, so like Litecoin, the head and shoulders that you're seeing is basically a bearish pin bar situation, right? So yeah, that's bearish on the daily chart. I wouldn't put a lot of weight into those chart patterns. Unless you're day trading, it's a different story. But for the bigger picture, no way. They're way too random. I mean, I don't even put a lot of weight into them on the bigger picture because the patterns are highly random. And I require a lot more proof and a lot more confirmation before doing something, even after such a pattern. So yeah, I'd be anticipating a pullback on Litecoin if this current candle, if the lows are taken out, which would translate into, your head and shoulders, okay? So thanks for asking. Hey, David from France, welcome. Support levels, VRA. Okay, let's take a look. VRA, USDT, let's take a look. So, oh, interesting. All right, so this is a nice looking chart, nice structure. Looks very similar to Bitcoin, right? Higher lows, higher highs. Okay, great. Let's first take a look at a weekly. Let me just see where these things are on the weekly. All right, so it's coming off of all-time highs. Okay, all right, and it's pulling back. Great, that's what you want to see. All right, and the structure hasn't broken yet. So as far as support and resistance levels go, you are at a support level. This is an old resistance right here. Should act as a new support, and as you can see, price is developing that little inside bar situation. You have that level, and you have this level. So what is this? The lower level is 4.5, almost 5 cents, basically. And this level, the current level right now, is that current price, which is what? 6.0061, just about there. So you're at a level of interest. But what you want to see develop here is a buy signal. It's not there yet, okay? So you have this inside bar. It's basically an inside bar. You need the high of the inside bar to be taken out. That would give you the buy signal. That price would be 0.69, basically, right up in here, okay? I'll draw a little line there. This would be the high. So that needs to be taken out, which means, look, earlier, as you can see, the price tried to do that and it gave it back. So that's not really a good sign. If the low gets taken out instead, which it looks like that's what it's trying to go for here, then that would actually be a sell signal. And that means you want to step aside and wait for this thing to see when the next buy signal develops. But you're at least in a much better location. All right, keep in mind, Bitcoin has been kind of acting in a similar way, and Ethereum hasn't really pulled back yet. So if this thing is breaking now, how is it going to behave when those break? Right? So just something to keep in mind, especially when this looks very similar to the Bitcoin chart. Okay, you may want to use that as your guide. Although, like I've been noticing recently, a lot of these coins have been doing their own thing. And I suspect it's because of the hype and all the promotion that they're getting from all these fin tubers, as they're called now, and their large followings, right? I think that's what's starting to go on with those, which, again, to me, like I said before, is a sign of a top. All right. Let me see what else. So I hope that answers your question about VRA. Okay. Abraham. Okay, cool. Long time, no writing. Oh, well, thanks for stopping by. It's always good to see you. Are you in the inflation? So Kai, that's an interesting question. I mean, we're in inflation. I don't know how else to describe this nonsense that we're seeing, but we're in inflation. I don't think the inflation is going to continue much longer with the dollar looking like that. Okay, because for me to believe that inflation will continue, this chart needs to be a bearish chart, not a bullish one. Okay, this for months, this thing has been putting this bullish structure together. That's not inflation anymore. Okay, that means the Fed is going to act, and we're seeing like the conclusion of all the stimulus and all the over exaggerated loose monetary policy that we've seen. So I think that if this continues like this, then we're not going to see inflation. If you want to call that deflation, but I think we have the inflation now, and this is a sign that they're going to do something about it, which is going to basically, when you have inflation, the Fed takes money out of the market, not puts more money back in, and that will affect things. Okay, so thanks for asking. Bart, okay, cool. Please, no casuals. Okay, no problem. Swing trading. Good. Nothing wrong with that. Swing trading. Okay, Bart. hype spike. Zelta, oh, I'm just catching up on the comments here. From Riga, Latvia. Cool, good to see you again, Zelta. I remember you. How do you think about UXIN? All right, let's see, UXIN. Is this a stock or is this a coin? I'm guessing this is a stock. All right, so look at this situation, right? Looks kind of like some of those other ones we looked at. Initially was hyped or something. Since then, gave it all back, but not every single part of it. You have this section right here, right where it is right now, is one broad high or low. I like the elongated consolidation. This reminds me of that QuantumScape chart, okay? When you get these really elongated consolidations, that could be an opportunity, because when it breaks out, it has a lot of room to run, especially if a lot of these people are short, okay? So as far as the short-term short-term price action, you have this little mini double bottom situation. But here's the thing, you're going to get a lot of noise, right? And we've had a lot of false starts here before. So maybe on something like this, maybe you want to wait for a little bit more of a breakout, a little bit more of some sort of proof. Maybe let some of these resistances get taken out, like what, $2.40? It's not a very expensive stock, so maybe you wait for something like that before getting involved. But as you can see, there's been quite a few false starts, right? And you may just get another one. So maybe you want to take that chance now and see if this support level can hold. Maybe this is the bottom of this consolidation. But it does have some more room to go lower if the support breaks, right? Look, this support, that support has been broken. You have this support over here. So this would be next if the support breaks. What is that? The high over here is $2, basically $2. So you're right now at 226. So you can be fooling around in this area here. For something like this, since it's not a very expensive stock, something like this, it probably would make sense. If you're betting on the consolidation breakout, perhaps it's a good idea to maybe start taking small bites. It's almost like a mini inventory trade, except you're not going to hold it for a really long period of time. And if it keeps going lower, you're not going to keep buying more and more. But perhaps in a situation like this, you buy a small amount of shares, right? Maybe 100 shares or something, or whatever is within reason, whatever is proportional to your account. And then if it pushes that $2 area but doesn't really break it, perhaps you can buy a little more. And if it breaks out, you buy a little more. So you're putting together like a position as it consolidates in this area. And if it breaks out, you have some from a good price, from a slightly better price, and maybe a slightly worse price. But if it really starts to go, right, that's where you're going to be looking to take money off the table. And I think the reward risk makes sense, right? Look, I mean, these are the areas where you'd be taking money off the table. Like those areas right there, this area too, okay? So the reward risk is attractive for something like this. It's just, it may take some time because obviously it's out of play. And you're waiting for that, maybe some news comes out or something. So you want to accumulate some. The key to something like that is you want to make sure that you don't take a position that's too big. So, for example, if you have $10,000 in your account and you're not going to invest all $10,000 into this, perhaps you're going to only invest $1,000. Maybe you're only going to invest $500. You have to determine that location ahead of time and then stick to it. Because if this thing goes to $1 or it gets cut in half, your investment or your loss will be limited to that investment. You have to really make sure you think in those terms, because these things, that's the kind of stuff that goes on with these things, right? So it's the people that make big money with this are people that keep their risk really well controlled, and they don't make big money per trade, right? Or if they do, they took a small risk. They threw $100 into something, and that $100 turns into $1,000 over time. That was a low risk, high reward trade-off. But they don't go in with all their money because, oh, this is a sure thing. You understand that? So that's how you do it. It's the lottery ticket game. And the way the whole altcoin situation that we've seen over the previous year, that was basically that. You throw in some small money, it turns into a great return relative to the risk you had to take. And hey, you take your money off the table and that's it. The game is over. Okay? But people think now that that's going to continue. That's where things get unreasonable, and they're probably they're buying into a top, and they're gonna get caught at the top of the cycle. All right. Anyway, so thanks for asking. That's UXIN. Okay. SPX chart to me is a result of money policy. Yeah, Kai, I agree with that. Overlaying money supply chart on SPX is telling. A generation of retail and institutional traders never saw any other. Yeah, Kai, so just like I was pointing out, you know, when when you look at the S&P, this is certainly a result of loose monetary policy. I mean, they just pumping money again. Like, just forget this chart. When you look at the weekly chart, this is the weekly, okay, the weekly S&P. I mean, yeah, I don't have to repeat that again. Just going back, that is certainly a lot of free money floating around, and no one knows like what a bearish cycle even is, because we have not seen one. It's like they've erased what a bearish. There are no more bearish cycles. Are obsolete. They don't exist anymore. All right, but man, when we get one, you know, I don't know. They're gonna have to figure that one out. But if they, here's the thing: if they're still stimulating money, if they're still pumping money into the market, we probably won't see a very pronounced bearish cycle, because that's what happens. A really hard bearish cycle really comes from money not being able to be borrowed, right? A tight money policy. If you look throughout history, I mean, that's usually been the problem. Okay, so when money is loose, that's how they've corrected this situation. They just, hey, print more money, make sure people can borrow money, make sure banks can borrow money, make sure money is cheap, and they erase it. And they've been doing this, especially since after the year 2000. They've been doing this like crazy, right? After 2008. So anyway, okay, I'm losing my voice now. Let me see what else we got here. I think I answered everyone's questions. All right, hey, cool, no problem. But yeah, Kai, I'm in total agreement with that. Can you take a look at UI for a long-term investment perspective? Is this a good place to start accumulating? Okay, Bart, let's see. UI, I guess that's a stock. And man, look at these moves. All right, so when you say long-term, first thing I want to do is this is the weekly on UI. So as far as a long-term investment, again, I don't know what they do, but look where you are. Okay, you're consolidating potential lower high. Look at this in this area right here, and it looks like it wants to break. Okay, so nice move up until now. So if you want to invest, here's the thing about investing. It's never a bad time. I mean, you can think of investing that way. You don't want to limit yourself. It's never a bad time, but you want to look at where you are on the roadmap. And if you're near highs or all-time highs, that's not the best time. So what do? You skew lighter. If you want to, maybe you like the company long-term and you want to get involved for whatever reason, okay. You have your allocation. You say, I'm going to invest $5,000 because that's what you want to invest. Okay. So you skew smaller, right? So instead of $500 a month for 10 months, you're going to buy $250 worth, maybe $100 worth, which is not much, but you're skewing small because you're near highs. If this thing starts getting hammered, especially if we see a market cycle and a tightening cycle from the Fed, we see all that, and you start hitting these levels, right? Then at those levels, maybe at the time of the month when you want to make your purchase, let's say you decide, okay, on the 15th of every month, I'm making my $500 purchase. That's the plan. But here we are at this great level, right? Oh, look, we pulled back all this. Instead of my $250 amount, I'm going to invest $500. Okay, I'm going to double the normal investment. I'm going to skew slightly more because we're at a better price. Okay, and if you get to some extreme prices, that's where you want to skew even more, except once you reach your allocation, okay, I'm all in at 5,000, then, you know, it's not a good idea to keep going. Maybe you want to add another 1,000, but you'll have to protect yourself somehow, okay? So the only way you can protect yourself in those situations, well, one way, is you limit your exposure. Okay, I've invested 5,000, I'm all in, I'm not allowed to buy anymore. That's it. There are other ways to protect yourself. You can buy put options, you can do things, you could sell calls on the stock you have and whatever, but I'm not going to get into all that. The point is, I think one of the easiest ways to protect yourself is not to get overexposed. If you have $50,000 altogether, you know, and $5,000 goes into this, that's it. $5,000 goes into this, and that's it. Okay? That will protect you, I think, over time. If the market really gets hammered and you get to a real serious bear cycle, you will be a stronger hand. And that's really what makes a big difference, because while everyone else is banging out because they invested it all at the top, they're banging it out at the bottom. And guess who's there at the bottom buying it still? You, because you have money to invest in there because that was part of your plan. So you're a strong hand, right? Instead of banging it out, you're doing the right thing. You're accumulating more inventory. And in a situation where it gets out of hand like this and it's going crazy and the whole world wants to buy it, that's when you're easing out of it, okay? There is a time to ease out of investments. I hope that's the right stock. All right, anyway. Oh, cool. So that's the answer to that one. Thanks for asking, Bart. All right, let me see what else we got here. Elizabeth, hey, thanks for stopping by. Okay, no problem. Yes, actually, Elizabeth, I didn't cover Ethereum fully, I don't think, because you weren't here, so, and you didn't ask me, but here you are. So let me put this on here. Is this Ethereum? Yeah, okay. So, well, I mean, I mentioned it briefly before. I mean, Ethereum is still strong, and that's the thing. It's strong. You have an inside bar here, a bullish inside bar, and if that inside bar high is taken out, you're going to have another buy signal. Now, Ethereum has been ridiculously strong. Can this thing touch 5,000? It's possible. It looks like it wants to go for it. I mean, 5,000 is over here somewhere, right? It looks like it wants to go for it, and you have higher lows in place. While some of these other coins, like I showed you the relatively weak ones and all this and all that. So at this point, Elizabeth, if you're still in this, I mean, there's not much to do here, but give it a chance. If this support gets taken out right here, which just got established, what was that, 44.60? You can even give it to like maybe 44.50. Then we'll probably have a change somewhat going on in the structure, and maybe we'll see more of a bearish cycle, kind of like this action back here, right? Kind of like that, because we're due for something like that. And the next real support on this thing is going to be over here. The old resistance at about 4,000. So just something to keep in mind. At this moment, there's no sell signal there yet. It's not a bad idea to lock in some profits. I know you have because you mentioned it before. So at this point, if you locked something in, I'd say it doesn't hurt to let it ride. And that's what you do. You let the market pay you until it no longer wants to pay you. And that sign isn't there yet. In fact, you're getting a buy signal, which I think is interesting because a lot of those other coins are not showing this type of strength, okay? Now, I'm not going to sit here and hype Ethereum, but you get what I'm saying. And 5,000 is probably going to be a psychological resistance. It's possible maybe that this thing goes vertical because it's going to lure in all the people who don't know any better. And they think it's going to go to 10,000, and maybe you see the pin bar develop there, okay? I don't know, but that's all we can go by. So thanks for asking. That's Ethereum. All right, Kai. Yeah, inflation question was about the future. Right. Yeah, so I think if the Fed does something about it, then, you know, if the Fed doesn't do anything about it, like they keep talking and talking and talking, I haven't seen a rate hike yet, okay? But if the Fed continues to be loose and they keep being motivated for political reasons or whatever, then I don't know, maybe we will be printing real barrels of money, you know? I don't know. But so far, that's the way it looks, and I'm anticipating that they're going to do something about it. All right, no problem. Can you, okay, you sure helped me a lot in how I think about. Cool. All right, guys. So I think I answered everyone's questions. I'm gonna wrap this up here. I hope you found this helpful. I try to do these. The whole idea is to answer your questions and to give you the insight and some confidence that you need to navigate these markets, because these things can be very confusing, especially when you have all kinds of conflicting information all over the place. So I'll just leave you with this. Just try to keep things simple. If you're not sure, go to your weekly chart, okay? When in doubt, zoom out. Go to your weekly chart and ask yourself, does this look like a high or does it look like a low? And as you saw, as many of those charts I pulled up, they're all vertical. So yeah, maybe over the next couple of weeks, maybe we flirt with highs and stuff like that, but I'm not expecting another big move from here. Anything is possible, but you have to look at the probability, right? You have to consider the probability, because there's no probability to look at. You have to consider the probability, especially as things start to change. We had that inflation report yesterday that seemed to get people a little nervous for some reason. And so things like that, if that becomes the perception of the herd, oh, the rate hikes and blah, 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 right? And then some other piece of news comes out that no one was expecting. Oh, Bitfinex, turns out they have no money in their vault. It's all fake. And now Bitcoin pulls back, 50%. Like, I'm exaggerating again, but something like that occurs, that can set the tone for a structure, a bearish structure or corrective structure. I don't want to call it a trend, and I'm not going to call it a bear market, because these structures that we're looking at are far from a bear market. But a corrective structure is within reason. And you can see easily 10, 15, 20, 30%, 40% pullback, but something like that will take months. Typically, it should take months to unfold, and it can be a slow and painful process, especially at the bottom of it, because that bottom may get tested a few times, as we've seen recently. So keep an eye on the charts, keep an eye on the levels. When levels break, remember, we're in a strong market still. When supports break, that's not characteristic of a strong market. So that's telling us something, okay? Just something to keep in mind. All right, you guys. So I'm going to wrap this up. If you'd like to know more about Greenbridge, you can click on the show more thing, and there's some links in there. We have a signal room and chat room and all that other stuff and all that. Okay, so join me Monday. I do plan to get back onto TradingView, just so you know. I'm still working on it, but I do plan to. All right, I'm not ignoring TradingView. I like the community there, and I get a lot of good questions and all that stuff. All right, everyone. So I hope you found this helpful. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you so much for watching.